what I learned is when I started to study the rich, and I don't mean like, hey, I'm a millionaire. I mean 10 million, $100 million plus. They do things differently, okay? And one of the things that they do different is life insurance.
Are you ready to transform your life? This is a no-nonsense show helping immigrants like you create generational wealth, even while working full-time. Get ready to take notes. Here's your host, Saket Jain.
Good afternoon, my good 12 listeners. Today, we have the pleasure to talk to Chris Larsen from Asheville, North Carolina. Chris, how are you?
I'm doing great. Great to see you, my friend.
Great to see you too. Great to see you too. And we were just talking before we went on air. Chris and I have a similar background. We both spent a bunch of time in DC, actually on the same street. Not in the same house,
crazy.
But same street. It's crazy. We almost bought the condo in the building that Chris used to live in and his wife. And now they live in beautiful Asheville. And kind of funny thing, Chris, which I didn't share with you, we almost moved to Asheville 2 years ago. Almost. Wow. We toured the place. We came in, we saw it, and we kind of settled in on Raleigh because of family reasons. But Asheville was high on the list.
Yeah. We're resonating at similar frequencies for sure.
Yeah, definitely. So, Chris, we're going to take deeper dive into kind of like your own journey and what you do and how you got there. But help us understand broad stroke, right? Just so that our listeners have the right context. Who are you affiliated with? Which company? What does the company do? And then we'll kind of go from there.
Yeah, so our company's Next Level Income, and thank you so much for asking. And I tell you, I share all of this in my book here, which I'm happy to share with the listeners if you're listening here today before we wrap up. But I started in college. I grew up, school was pretty easy for me, and that kind of hurt me later on in life as I went into engineering school. I didn't really learn how to study very well. And frankly, I wanted to race my bike. So I was like, I'm going to race my bike, get a degree, I'll turn pro, I'll come back and figure out, what happens after that. But along the way, life, as we all know, throws some curveballs at you. And for me, my best friend passed away between my freshman and sophomore year in college. And at the time, I just put my head down. I kept racing my bike. And for me, it was wonderful because it was therapeutic. I can go ride my bike, and it kind of allowed me to have an escape from the pain I was feeling. But what I wasn't doing was I wasn't going to school. I was skipping classes. I wasn't really focused on that. I don't want to be in school. I don't want to be there. Frankly, I was probably depressed at the time. So it took me a while to kind of gather that. And after a year racing, what I realized was racing didn't make me happy anymore either. And what I came to realize was that I felt that there was more that I was meant to do in life than just ride my bike around in a circle. And so I quit racing, came back to school, and I made this pledge to myself that I would live with no regrets. I wanted to take advantage of all that life had to offer. I wanted to honor the life that I was given. I also wanted to honor the life that my friend Chris didn't have anymore. And as part of that, we all know, like, you need money to be able to take advantage of opportunities in life, whether it's a business opportunity, an opportunity to travel, an opportunity to take, maybe a new risky role or start your own business. All these things take money. And I started to learn about money, about investing, and the same family friend that got me into cycling also introduced me to this concept of investing or compound interest. And I had this money magazine, it had this upward sloping curve in it that showed compound interest. It was talking about Roth IRAs at the time, which were a fairly new concept. So I started getting interested in the stock market, and that's how I really first got interested in investing. But after riding the ups and downs of the stock market in the 90s, I really yearned and I searched for a more stable investment area. So I said, I'm going to be an investor. I'm going to learn how to invest. And ultimately, after reading hundreds of books, getting an MBA in portfolio management finance, I decided that real estate was going to be my solution to financial independence. The problem was I really didn't have a lot of capital. I had some money from trading in the stock market, borrowed money from my parents for my first house. Actually, more accurately, I had my mom co-sign on the loan. And then that's how I got my start, was buying my first property when I was 21. Long story short, we evolved over time, ended up getting more into commercial real estate. Now we syndicate projects, and we do multifamily, we do self-storage, mobile home parks here in the Southeast, as well as express tunnel car washes.
Wow, Chris. First of all, thank you for being vulnerable on the show, right? That I always appreciate that, because that shows you're actually a real person, right? So sorry for your loss. I can't even imagine having to go through that loss. And well, I think from what you've definitely honored your friend, right? The kind of life you're living right now.
Oh, yeah.
So I'm sure wherever he is, he's being proud of you. So Chris, kind of like what you just shared your story, right? Kind of like Let's actually take a few steps back. We were talking about you getting interested in money, right? Let's actually reflect on that. Because, yes, everyone wants to be rich, right? Kind of like growing up, especially when you're seeing, because you end up comparing yourself with somebody else and you don't necessarily have a whole right context. And the question does come at why this person has this versus I don't have that, right? Now, I think that's the right time to reflect also internally that you may have something more than the other person, maybe not materially, but some other way, spiritually, or you may have more love in the family, or regardless, right? So when you were going through that process that you got interested about money and you got interested in investing, what was going through in your life? And what made you to take that next step?
Yeah, so a few things. First off, racing bicycles is interesting because cyclists, even if you're a pro, even if you're a good pro, you don't make a lot of money.
Right.
And I was always fairly entrepreneurial. My father, who actually passed away when I was 5 years old, that really kind of gave me that additional level of perspective with respect to, kind of how finite life is. He was an entrepreneur, so I probably have it in my blood in some way, shape, or form. But I was always looking for ways to make money. I sold wrapping paper when I was 12. I had a paper route. I worked odd jobs. I had like a loft business when I was in college. So I'd buy lofts. I would sell them at the beginning of the year. I make like $10,000 at the beginning of the year. I always enjoyed the game of money, how to kind of create value and do these things and sell and really create solutions, kind of put people together, with different solutions. But when I read that article about investing and how you could be a millionaire by just investing a small amount every month because of the way compound interest worked, it really appealed to me as a numbers person. I was always in the math team, and so I was like, well, okay, this is interesting. Like, this is a way to multiply your time, right?
Yeah.
Like going back to that theme where I knew time was finite because of what happened to my friend. I didn't want to have regrets. So what I was really interested in money for was the ability to have enough so I could make my own choices.
Right.
I always had this issue with authority for whatever reason. I didn't want people to tell me what to do. And as one of my professors said, he goes, always have some money set aside. So if somebody asks you to do something you don't want to do, you can tell them nuts to you. And if you see my hand, if you're watching this, you say nuts to you. He was saying F you, right? We call that F you money. And the bottom line is, I think, I always knew that if you had money, you had more options, you had more freedom. And that's really what I was looking for, was freedom.
Isn't that interesting, right? So, of course, your perspective has shifted because of your life incidents that has shaped you, right? Kind of like reflecting on when money can be two different things that I see, right? Money could be a passion, a lust, kind of like you just keep following it and keep chasing it, and there's never enough, right? And then there's the other side of that is, let me get money to buy freedom. I personally see that, my story is similar to yours. Several events have happened throughout my life, which have kind of like, everyone's going to die. Hopefully all of us have long lives, but we just don't know how much life we have, right? So in the event, if you can become a billionaire tomorrow, maybe you will, or maybe you won't live to become a billionaire. You miss out on today, right? So there's a fine balance between, and money usually is an option. Money is an option. As I see, money buys you options. Money buys you choices. Money may also buy you beautiful, luxurious cars and homes and everything else you want. But more importantly, it gives you a choice, right? And I think that's really what drove you, it seems like.
Absolutely. Yeah, it was a choice. And I grew up in a very modest home. And it was, if we were upper middle class, we were but we were definitely middle class. My mom was an assistant teacher. My stepfather was a contractor. I made more money the first year I worked than both of them combined did. So it was a very, very modest. And I would not say that it wasn't ever in my face. It wasn't ever painful. Like, we didn't have stuff, but like my grandmother made my clothes. We couldn't buy the, the designer shoes, and I didn't really travel much. We didn't really go on vacations when I was younger, but that didn't bother me.
Right.
So I think you're right. I wanted to have the option to do things that I wanted to do when I wanted to do them. And cycling really influenced that a lot. It also gave me the chance to travel a little bit and say, man, I want to travel and do things as I continue, to get older in life and, be able to have these opportunities and these experiences.
So let's fast forward, Chris. That was then. Now we're here. How's life shaping out for you right now? Where are you on your freedom journey?
Yes, I feel very fortunate and very grateful. I worked in a W-2 role. I mean, to be fair, 1099 W-2, a lot of people call it, like a corporate role in the medical device industry for about 18 years. Really enjoyed that. Got to work with some wonderful people. Got to work in the OR. So I got to take part in literally thousands of different surgeries, which was very enjoyable. Loved the technology, but was always investor first. That was kind of my mindset. And as I made money, I put together rules that I had. So, rules like save 50% of what you make and invest in cash flow businesses or investments, different things like this, right? So as I was able to build up our cash flow, as I was able to build up our passive income, I was able to walk away from that. And now you kind of fast forward, as you were saying, my boys are 11 and soon to be 13.
Oh, that's awesome.
That's really what my life revolves around. Yeah. So I get to do things with them. I get to travel with them. I get to have different experiences with them. My older son is off school tomorrow. I'm going to take him skiing because
that's beautiful because you can't. Exactly. Yeah.
Yeah. That's right. And that's really, so if you said, hey, Chris, give me an example about what your life's like. Tomorrow's a great example. I'll get up, I'll get a little bit of work done in the morning, and then I'll get to spend time with him and do that. But from a bigger perspective, one of the things I realized, and, if you're listening, I know you've been through this yourself here, Saket, but if you're listening, it's what's interesting is as you get to that point where you don't have to work anymore, it's actually very anxiety provoking because when you're used to something being, your identity for so many years, especially if you're a high profile professional in a role or you're in a leadership role, it's hard to walk away from that. And I took a lot of time to kind of figure out what my next step was, my next level, if you will, in life would be. And our business, we share investments with our investors, but even more so than that, we're an education company. We try to share education with our investors, and those can be people that will never invest with us or people that have been investing with us for years. So they can take the same shortcuts and, really get to a point of being able to live life on their own terms as quickly as possible.
Yeah, I think it's interesting to reflect back on that, right? Because I think what most people think, and I was one of them, that being financially free means you're going to be a beach bum, right? I don't think you and I are cut from that cloth, right? We're still working. We're working hard every single day. I mean, what we do, syndications, and both of us are in the similar fields, it's not an easy thing, right? It took a while to get us to one point where you and I are now talking. And it took a long journey. And it was a hard journey, right? So it's not easy. But the advantage of not having to worry about where your next income and paycheck is going to come from is really more about, are there days where you can choose not to work? Like your time with your son tomorrow. You don't have to ask for permission from anyone, right? And you are controlling your own time. Does not mean you're lazy and you want to just sit on the beach. You may want to that too. That's okay. There's nothing wrong in that. But that's not the reason why we did it, right? There'll be moments of ups and downs. You still want to add value to people's life. You still want to be a significant contributor in changing people's lives, right? I think that's really what drives me. I would love to hear what drives you to still continue working so hard when you don't have to worry about where your next check is going to come from.
Yeah, no, you're exactly right. And that really is it. And as as I kind of try to figure out what the next chapter look like, it's like, how do you make that contribution? How do you make those impacts and do that? And for me, it's easy. I look through kind of the lens of my children. I say, hey, what can I do to make my boys proud? What can I do? What lessons can I teach them? And a lot of times as I'm putting together material, whether it's for our course that just came out here at the end of last year, or whether it's the book or whatever it might be, it's like, okay, can my sons understand these concepts, right? So that they're easily digestible by almost anybody. And, it allows me to kind of challenge myself and say, okay, maybe I took this concept that may be complex, but how can we make it simple? How can we make it easy so it can impact as many people as possible? And really unlock these secrets that in a lot of cases, as have been kind of kept by the wealthiest portions of the population.
And the reason for that, right? There's a reason for complexity because nobody, at least on the Wall Street, nobody wants it to be available to everyone because then they're not going to make money. So the concepts they have jargons and they have sophisticated terminology. Does not mean that the product is actually not good or nobody else can understand it. Chris, I'm going to pivot really quick on something. I'll piggyback on this topic and pivot on completely something different. I know you and I have been talking about a concept of infinity banking, right?
Yes.
It's one of those topics which has been villainized as a life insurance policy by a lot.
Yep.
And I'll talk the names like Susie Ormans and the Dave Ramseys of the world, where life insurance is a scam, right? You should not look at life insurance as a bank and whatnot, right? So actually, let's take a if you don't mind, I would love to explore that a little bit more, because I know you're a firm believer in that product. I've been a converter, right? I've been converted now to believe in that. I've had several policies in that regards for the last 4 or 5 years. Before, I remember somebody would ask me, hey, should I buy a term or a whole life? I'm like, just buy a term. It's a scam.
Term, yeah.
Right? I was one of those.
That's what I was taught. Absolutely.
That's exactly what I was taught. But I think the question was, until I started hanging out with the right folks, which is my ecosystem changed, and I kept an open mind, I didn't realize it. So let's actually take a deep dive. When you're talking about, let's simplify the whole terminology, right? When we'll talk about infinity banking. Now, infinity banking, for those of you who have never heard the term before, it's really a life insurance policy that can act as a bank for you, which essentially means who are the wealthiest people in the whole country. Chances are they're going to be bankers, right? Banks, the primary institution that's going to be making money on top of your own money, and make, without really putting their own capital, they end up making a lot of money, right? That's really what the model for infinity banking is. And we're going to use very commonly known product, which is life insurance, to create a bank for us. So, Chris, with that context, help us give your perspective, and how do you marry with your syndications for your own purposes and also for your investors?
Absolutely. Yeah. So we're going to break this down step by step. And because I've spent a lot of time thinking about, like, how do you conceptualize this, and why does the industry get it wrong, and why is it hard to understand these concepts? So first off, I worked for State Farm, and same thing. I was a licensed life insurance agent, and I'd say buy term, invest the difference, because I said that's how I was taught. And
I'm sorry, your State Farm. This was before you became a syndicator.
This is like 20 years ago.
This was way back when. Perfect.
Through my MBA. Perfect. Yeah, many years ago. So, and by the way, we got a whole free webinar. We have free white paper online. So nextlevelincome.com. Just click on the banking link, and you can get a whole presentation on this, and you can watch it, you can review it, and you can challenge these concepts. So first off, this little story exemplifies this. I was having this conversation with an investor one day. He said, my investment group disagrees with you, Chris. And I said, okay, great. I said, let me ask you a question. And this is where, like, the Susie Ormans and the Dave Ramseys, where you can kind of say, hang on a second, we're dealing with something different here. I said to him, how many people in your investment group are financially independent? He said 0. I said, okay. I said, how many in your investment club are worth 8 figures or more? He said 0. I said, okay. I said, well, we need to consider maybe, who you're talking to. And I think, if you listen to Dave Ramsey and Susie Orman and, the typical financial advice out there, they're probably not teaching to you if you're listening to the show. They're teaching to people who are just trying to get to the point that they can maybe one day retire and maybe have enough. If that's for you, great. You can stop listening right now and follow that advice. But what I learned is when I started to study the rich, and I don't mean like, hey, I'm a millionaire. I mean, 10 million, $100 million plus. They do things much differently. Okay. And one of the things that they do different is life insurance, and specifically whole life insurance. They have lots of it. One of the reasons they have lots of it is because it's predictable. Another reason that they have a lot of life insurance is because it's confidential. It's a contract between two people. So those are some nice things that you have. You also have to remember that my father died when I was 5. My best friend died when he was 18. My experiences color the fact that I know that life is finite, and I wanted to make sure that my children had some stability and security if something happened to me. So I'm colored by that, right? But I want you to stop and think about insurance like real estate for a moment. If you buy term, it's like renting, okay? Now, renting a home or renting an apartment historically has always been about 1/3 cheaper than buying. But my guess is, if you're listening to the show, you probably own your own home. You probably own more than own home. You may even own some real estate or be invested in some real estate. The questions are why. 1, leverage, right? When you buy a house, you own the leverage because you own the asset, but you're paying it down an amount that's probably lower than the equity that you have. This is like whole life insurance. Think about whole life. You have that mortgage that you pay over a period of time. It might be 7 years, it might be 10 years, 15 years, 30 years, whatever you choose for it to be. if you structure it properly, and this is the core of the infinite banking system that Nelson Nash developed, you can actually borrow money out of your insurance policy. So just like as your house goes up in value, you can borrow money from your home tax-free, and you can do whatever you want with that money, and your home continues to increase in value, even if you're not paying on that mortgage anymore. It's the same thing with insurance. And that's the second thing that the wealthy do. The wealthy, they don't take a salary, right? They use their assets and they borrow against them to take money in a very tax efficient way. So if you think about those things a little bit differently, that's going to help kind of understand the concept. The next piece of this puzzle is something that, again, this is a big difference between, what the rich do and the poor do, right? So when you own insurance and you have the ability to do this, you can have money working for you in multiple places at one time. So it takes a while to put this into place. But when you put one of these policies into place, you can actually take money out of it and invest it in another place. So what does that mean? This is where becoming your own bank comes into play. You own the asset and you own the liability. And that's what banks do, right? So they have the asset and the liability. And that's the challenge, because a lot of people say, well, why would I borrow my own money from myself just to reinvest it? Well, if you can borrow it at 5% and earn 5% on your money, that money's compounding at 5%. If you pay it down in a simple straight line fashion, we illustrate in our webinar how you're actually making money in that. But chances are you probably have opportunities to invest that money at 5, 10, 15, 20%. And that's how the rich continue to get richer and richer and richer. That's what banks do. That's what Wall Street does. And then you can even go and take this to multiple different levels. And you can take this and you can create generational wealth, because once you take these life insurance policies, you put them in, say, a trust structure, you can create literally 9 figures of wealth for your family in a very short period of time, which I don't know any other product that you can do. And that's why I say this is a product, this is a solution. This isn't an investment. If you ask my best friend whose wife died 3 years after he got an insurance policy on her, what his return on that investment was, he probably wouldn't take too kindly to doing that. And that's the last thing. Your average investor says, hey, I can get a better investment somewhere else. Well, it's true, but where else can you get a specific amount of return over a specific amount of time that you can't get anywhere else? And that's where term runs out, because at some point it just doesn't make any sense. Whereas my policies, if I live long enough, the insurance company will actually cut me a check for the amount of my policy. So I just covered a lot in,
No, that's interesting, right? So I think I want to pass it out. So I think I'll tease out a few important things. I think one of the few things, right? I think we're not saying it's right for everyone. I want to put a big disclaimer out, right? It may or may not be.
That's right.
So I think you'll have to work with your advisors. And if you don't have one, contact us. We'll help you connect with one. What we're basically saying is keep an open mind towards an insurance policy. And not every insurance broker and not every insurance policy is created equally. So you have to really, really, really work with somebody who knows infinity banking concept. Because I'll give you a very quick example, right? There are two levers to pull in an insurance policy. And Chris, correct me if I'm wrong, there's really cash value benefit and a death benefit. Most of us are always looking at insurance policy as a death benefit. When we're looking at infinity banking concept, we don't care about the death. We care about the death benefit, but that's not the reason we're buying it. That's a side benefit of it. What we're looking at is how can I maximize my cash value? How can I figure out the premium that I'm paying? Most percentage of that is going toward cash value. Now you can get a $1.5 million life insurance policy or $200K life insurance policy, depending upon how it's structured. For the same amount of premium, a $200K life insurance death benefit, a major portion of your premium is going to go towards cash value. And for the same amount of premium in a $1.5 million, your cash value benefit is going to be reduced, right? So I think these are complex topics where I don't think we can cover on this episode here. But I think what we really wanted to show was the power of that is that there is a tool this is where we talk about conventional thinking is not going to make you rich. So you can either be conventional or you can be wealthy, right? You cannot be both.
That's right.
So what the show is all about is bringing people like Chris to make sure we can challenge the conventional thinking and give you another perspective. So what we're now saying is, okay, now I have the infinity banking. I've put the money in. I've bought this concept. How do I use it, right? I think let's talk through a case study. It could be an abstract example. Say I want to buy a rental property for $500,000 and my cash value, I have about $400K in cash value sitting in there. How do I use it to buy this property?
Yeah, so we can use that example. I can actually use a real life example.
That's even better
as well.
Let's do that.
That happened last year. But so first off, you can really take this concept and you can do multiple things. Like we did almost 15 years ago now. Actually, my son will be 13, so it was 14 years ago, the year before he was born. We just set him up instead of a 529 plan. So we said, hey, we're going to put aside, say, $1,000 a month, and we'll have actually a guaranteed amount of cash value that we can then draw against. And here's why I like that concept. Now, I can give my children a student loan. And some people may say, well, that's silly, Chris. Why don't you just give them the money instead of giving them a loan? Well, now my children understand a couple different concepts. They understand the cost of capital. I can say to my children, here's $100,000 of cash value in this insurance policy that you have access to, but you can use it for school. You can use it for a business. You can use it to buy a car. You can use it to buy a piece of real estate. What if you get a scholarship? What if you don't get a scholarship? What if you go to school? Very simple concept you can do. So once you have that cash value in there, last year, I had a friend of mine, we buy car washes, okay? And we syndicate car washes. So he calls me, he says, hey, Chris, I have this off-market car wash deal here in town that one of our mutual friends was selling. I looked at it, I was like, well, it doesn't really fit our model. And he said, well, would you be interested just in partnering with me and doing it? And I looked at it, the numbers looked really good. And the challenge was we needed to close in 30 days to get a 10% discount.
Yeah.
Okay. So fortunately, I had, let's say I needed $250,000. Let's say it was a fairly significant amount of money. I had at least that much in my life insurance. Now, I would never have that much cash just sitting in an account because what happens is you have what I call liquidity drag, right? Your money's sitting there. It's not earning a return. It's getting eaten away by inflation. Maybe it's earning 1% or 2 or 3 in your savings account. Whereas my insurance policies, I've averaged almost 6% return on my cash in these policies. I was able to literally wire the money within an hour for the down payment for that car wash. Now, what happened was, what started as, and I'm going to use some round numbers here, what started as a $100,000 down payment. When the bank came back, they said, oh, actually, we can't give you this full amount right now, the way the underwriting standards are. You know, you're going to need another $150,000 to do it. So it went from $100,000 to $250,000. Not a problem. Wired the money. It wasn't an issue. We're refinancing it. It worked out as part of the business plan. But I was able to take that money and do that. So it's a very easy way. And I know we're going to get that money back through a refinance event this year. So I can plan to have that money come back in. Oh, by the way, I'm earning a really nice 30% cash on cash return on that invested dollars. So that's more than paying the 5-6% interest rate that I'm paying on the money that I quote unquote borrowed out of that policy. Oh, and by the way, because we structured it, like you said, with the right type of insurance company, I'm still earning my guaranteed rate inside of that policy, and I'm earning a dividend on top of that.
As if, I think I'll add something to it, Chris. As if you never took out the loan.
As if I never took the money out. And that's really the wild thing. And that's why I relate it towards owning real estate, because your house doesn't care if you took equity out of it or left it in, because your house is going to continue to grow in value based upon the value of the house, not the value of the cash inside of your equity.
So you know what I always like to explain to some folks who I'm talking about the infinity banking, it's really a HELOC, right? It's really a HELOC. You're getting a HELOC on your house. And you draw it, you pay it back, you draw it, you pay it back, and it's available to you. The problem with HELOC is the loan amount of the HELOC is fixed, right? Whatever the credit is given to you, that doesn't change. The beauty in the infinity banking is...
Or the bank can call that loan.
Or the bank can call that loan. The beauty of the infinity banking is not only does your cash value grow, there's no callback procedure, right? And I think I also want to talk about one more thing, Chris, where you talked about is within hours, you could wire the money, right? And I think the reason, it's important to talk about the reason is not because the bank's just giving you the money. Bank doesn't even have to approve that loan because it's really your money as the life insurance beneficiary, right? You control your money.
There doesn't have to be a bank involved,
Right. I think that's the most powerful thing. If you believe the deal is right, you go do it, right? It's your money as if it was money sitting in the cash. Yes, there's one extra step you have to take, but no approval required. You just have to go through one extra hoop, but it's not that painful. But given the option that we have. So I think it's a powerful concept. I would encourage everyone to at least take a look at it, right? Now, if you're going to have further conversations, you have Chris, you have me, you have people like ourselves available to have a further conversation. Of course, we'll have to understand your situation to tell you before. We don't just call Chris and say, hey, Chris, is it going to work for me? That's not a 5-minute conversation, right? So that's a deeper conversation. We want to make sure we do it right. Yeah.
No, absolutely. And the thing is, what we've tried to put together, and our concept, we call it the investment optimizer, because we've actually mated the concept of what you call infinite banking with investing in syndications. And if you are already investing in syndications, what we've done is created a pathway. So this whole process, this insurance pays for itself in that. And that's really the cool thing, is if you set it up the right way, you're not really paying anything for it. You're getting this additional benefit. And you do have to go through the process, but once you do that, you have this really cool tool that can be used for investing, can be used for other things. And the best part, in my opinion, is, I can sleep well at night because if something happens to me, I know for a fact what my children and my family are going to be taken care of from a financial perspective with.
And Chris, there's also a misnomer, right? That I'm 52 or I'm 46 or I'm 42 or I'm not 20 anymore. I shouldn't be getting a whole life, or I shouldn't be getting IUL. From your perspective, is there an age restriction on when this concept stopped making sense?
Well, so that's the nice thing. When you look at this, and this is what we try to do, we articulate what the actual insurance costs. And that's where you mentioned before, Saket, that you're going to structure a policy around the amount of insurance you want. We structure it around the amount of money that you want to put into the policy. So we minimize that. And you can see if those numbers make sense for you. But here's the thing. If you and I had a business relationship, we're not related, but if we had a business relationship, I could get an insurance policy on you. You could get one on me.
Correct.
So you can do policies on your partner, your spouse, your children, your business partners. You don't have to insure yourself to use this concept, which is really powerful. So there's a lot of different levers that you can pull to see. So if you love the concept, again, it might not be for you. I had a younger gentleman called me. I went through some questions with him. He wasn't married, didn't have a family. I said, well, why do you really need insurance? He goes, I love the concept. He worked on Wall Street. I said, look, I really can't see how this would work for you because who's going to get the insurance? And he goes, I don't know. I said, well, if you get married, if you have a family,
right.
But he didn't have anybody that needed the insurance. So he actually had a stock portfolio and he was going to leverage that. So he used a similar concept. But if you have a relationship, if you have a family, if you have an insurable interest, and again, it doesn't even have to be you that you insure, you can still use this concept.
Wow, Chris, what a journey, man, from what you started to being competing in cycle races and now all the way to infinity banking and financial freedom. I love this story, my friend. Thank you again for taking the time and sharing with us. So, Chris, we're coming towards the end of the show. I want to respect for your time as well. We always end the show with 2 questions. First question is going to be going back in time when you were in that zone of not sure what you want to do, what life's all about. We're kind of like asking the deeper questions. If you had the chance to go back to that self and kind of give them one insight to make their migration journey in life more intentional, more, I would say not easy, but more productive, what would that be?
Yeah. I would say get a coach as quickly as possible. And I mean like a real coach, like somebody like a mentor to do that. Because no matter where you are in life, there's somebody that's probably been there, unless you're Elon Musk, right?
Yeah,
there's probably somebody that's been on this path and can help you and can help shortcut that. And that's really what drives us behind our educational materials and those sorts of things. But I would say, Chris, you don't have to try to figure it all out yourself. Go find somebody. There's something, just keep looking for somebody that's done what you want to do.
Awesome. One last question. I know you'll love that question as well. It's more about, we've talked about you, we talked about everything else that you do, your family, we talked about your previous self. What about the whole humanity? I mean, what do you want and what is your vision, desire for humanity to migrate towards? I know we were talking about DC and the level of stress there. Yeah. I think it's just, I feel like you have thought about that answer. You thought about that question.
Yes. Yeah, I think about it a lot, and it's weird, right? Because when you talk about money, you're like, well, there's not as much meaning behind money as, like saving the environment. I'm an environmentalist. I love to be outside. We were talking about taking walks in the woods here right before the show. And what's interesting is I heard a great interview a couple weeks ago, and the gentleman's a scientist, and he said the number one predictor of if people care about the environment is whether their country has a per capita GDP of above $5,000 a year. The bottom line is, again, this goes back to what we started talking about at the beginning of the show. If you have the financial ability to do things, I think you're free to live your best life. Yeah. People are going to care more about helping others, helping the environment, doing what their talents or doing what they're put on earth to share their talents and do. Right. And that's what drives me. And I understand, this concept, some of these concepts in finance. If I can help share those with other people, hopefully they can share their talents with other people. And I think that's just going to make the world a better place.
Awesome, Chris. On that note, buddy, I'm pretty sure some of my listeners will want to get in touch with you, where they can find you.
Yeah, super easy. nextlevelincome.com. You can get a free copy of our book. Just click on the resources link. You can get a free copy. I'll even send you one. You can also get, if you click on the banking link, you can get that webinar and the white paper. It talks all about the concepts that we shared today. And if you have any questions, just click on the contact link. You can get in touch with us, answer any questions that we didn't talk about.
Awesome, Chris. Well, thank you, buddy. I have to come out to Asheville to meet you. I love Asheville as a place. Would love to see you guys. And thank you again for taking the time and adding value to our listeners. Appreciate it.
A pleasure. Thank you.
If you got value from this episode, you might consider sharing this content with a friend. But most importantly, be sure to take action on what you've learned. One way you can take the next step is to connect directly with Socket on an investor call. That link is waiting for you in the show notes below.
The content of this podcast is for informational purposes only. Please consult your own advisors when making any investment decisions. Keep listening. We'll see you on the next episode.